All right, what we want to do, I want to do a quick video on this. This is a number 3 pattern, okay? Number 3, you have a number 1 and a number 3 in the trade room. And the best way to trade the number 3 off the trade room is if the moving averages are down, right? If we're down in a downtrend, you let the LVA break, you let it retest within 2, maximum 3 ticks, and get pulled in with a 3 Simrenko. That's a number 3 trade. That's a trade we got going on now. Looks just like that. Breakdown, retest short. All right, there's only 2 patterns we look for, a number 1 and a number 3. A number 1 is with trend, and a number 3 is a break retest with that trend of LVA or HVA. So what I want to show you this morning is a rejected area. If it comes down to LVA before and gets rejected, meaning we got buyers interested at LVA, and that level, if you look, broke, immediately look for a retest of that level for a strong number 3. This could be the strongest number 3 you get. Right there it is. Okay? So this is called a rejection trade. If you log in and it already bounced off the LVA once and the market turned down, look for a break of that level, a retest of that level. It's going to be a very strong trade. The reason I'm saying that is, look at yesterday's trade that I called out also. I called this number 1 low yesterday, and it got rejected, went straight up. So I knew if it broke that level, we're going to look for a retest short. And I said we got a 130 tick downside before it broke on the mic yesterday. Sure enough, it broke, it retested on J signal, and look at the hit we got. Over a $1,300 potential with a maximum $150 loss per 1 contract. Same thing today. Look how it got rejected there off the LVA. So I knew if it broke LVA, it's going to catch all these wrongly positioned traders that held and did not scale out like we did. It's going to catch all of them. So if it breaks retest, that's what you're going to get. So that's what's called a rejection trade. If it bounces off the LVA before and LVA finally breaks, look for a number 3 pattern off of it. Break, retest, just like this. Very important you understand that. That's been working for 30 years in the market. Same exact setup called a number 3 trade since 1985. If it gets rejected on LVA, HVA, look for a break, retest off of it with trend. Really good way to do it. All right? Another thing I want to touch base before we get off on this video, get trading here this morning on some other setups, is I want you to look at this right here, how to use the ATR. The average true range, I did a video on this a couple days ago. Go to daytradingthefutures.com. I'll show you how to do it. This last sell setup right here was gorgeous with the ATR. Look how this set up over here on the J signal. Now like I said, go to daytradingthefutures.com. I spent about 20 minutes showing you how to do this. That upper left-hand chart is great to use with these inner and outer dots called the average true range. The market, what it does, it gets out of range, meaning what it does is it gets way away from these ATR dots. Right here's a red ones. These are a shallow retracement, and the outer is a full retracement. Adam, our members, has been doing a great job of pointing these out to you guys when they come up, when he gets in a position like that. So I appreciate that, Adam. Point that out to traders so they get used to it. Had a great one yesterday, great one day before, got a great one going here today. This chart by itself can work all by itself. It's that powerful. What happens is when these moving averages cross down, I start getting these, when the market gets way away from these dots, way away from these moving averages, you start seeing these dots print. Red dots would be a shallow retracement. The magenta dots would be a deep retracement. So what happens when the market gets out of balance or gets away from these average true range dots, it normally comes back up to them, it touches them, and then you get a continuation of trade. So what happens is I look at the J signal when they come up to these dots, when you're in a trend. I only like looking at the ATR and trend markets also, meaning you're down below LVA or outside of HVA. That's the best time to look at this average true range chart. So what happened is we come to the red dots. We get the J signal consequently at the same time. This gives you an ultimate confluence trade to take that trade. You're right on the symmetry dots also. There's your doji. There's your entry. There she goes. Okay, that was an average true range confluence J signal trade. And like I said, you can play that video, and that's how we do that trade with the 2-minute chart above here. Okay, It doesn't matter if it's the inner or outer dots. I prefer the outer dots, the edge dots, because it's a full retracement. But if it pulls me in right here with the J signal, that means a shallow retracement. You should see a big hit right away. And sure enough, you got a lot of speed on that trade. Same trade yesterday. We had a lot of speed on that trade after news. Same trade happened yesterday. Adam was pointing out. It went really fast. So keep an eye on that chart. That's not a profile chart on the upper left. That is an ATR chart, average true range. I use these dots. They only come up about once or twice in the morning session. But when they test, it's a great continuation. All right, to the upside, downside. Play the video and I'll show you how to do it. Okay? It just happened on gold also this morning on a break retest of HVA before news came out, ATR confluence, and bounced it also. All right? So we got a 1 and a 3 trade over here on the black charts. And then we have a number 3 trade all by itself over here on the white charts, on the ninja charts. Only 2 trades to know in this trade room.